welcome to your trades, and what a week it has been. Post Diwali fervor, just getting back to work post the Diwali break, and we've managed a third straight week of gains. In fact, the Nifty had a touch and go moment with that 10,700 mark, a significant cool off in crude, and I think these two have been the big factors for us. Not just that, the re-emergence of Nifty Bank, the fact that Nifty Bank scaled up above its 200 DMA and managed to gain a 500 points in the week gone by as well, was significant to itself. The Nifty alone has added about 50,000 crore rupees to the market cap. Sun Pharma market cap, on the other hand, got eroded by about almost 17,000 crore rupees. But that's pretty much a large flavor of the week gone by. Also saw the fag end of earnings as well coming in, a slew of them which the market reacted to this way as well as that. But let's put it all into perspective and what lies ahead in terms of what the next week is going to offer us, considering it's going to be a truncated one, with Friday being a trading holiday. Yogesh Mehta as well as Manav Chopra both join in to analyze the fundamentals as well as the technicals of the market. Gentlemen, evening. Manav, if I could come to you first. You know, what one is seeing that 10,700 for the index is becoming a bit of a hurdle. Do you think with the outperformance in Nifty Bank, can banks really push the index higher, and can we manage a big breakout above the 10,700 mark come next week?
Yes, absolutely. If you look at the broader index, the banking index has been forming consecutive series of high tops and bottoms, and the kind of a weekly support that the bank index has formed, and the kind of a reversal that we are seeing in the PSU banking space also by the private banks, it clearly indicates that going forward, the banking index is likely to see a sharp upside. I sense once if the bank index manages to close above 26,400, will not be surprised to see another 800 points rally. And most importantly, Nifty has managed to see a weekly close above 10,600. I think all said and done, I think going forward the momentum looks very strong for the Nifty, and it has confirmed a very strong support at 10,550 on the lower side. Eventually, I think Nifty would be seeing targets of 11,000 in next couple of weeks. So overall, looking at the entire scenario for the Nifty and Bank Nifty, one should definitely maintain a buy on dips approach.
Yogesh, evening to you as well, and where do you sense the leadership within the Nifty is going to come if we are to scale up further than this and all the way to 11,000 as Manav believes?
Good evening. Till 15 days back, nobody would have imagined that Nifty would be recovering by 4-5% in such a short span, because the outlook was very bleak because of the crude and the INR condition. Now it has been reversed, and again it is in favor for the Indian economy. So post the earnings season, it seems that where the numbers have been better, and of course it would maybe somewhere it would be a below estimate, but overall it seems that this time from the number perspective, hardly there is a 3-4% cut into the Nifty EPS, and the growth rate would be 13-14%. So looking at that, we are trading at around 20-20 and a half times P multiple for FY18. So if next week, if you want to see that who could be a probable winner or the performer for the as a leading sector, then would be probably Reliance and the SBI, because PSU Bank will be more in focus because of RBI board meeting, and let's see what are the outcome for that. And probably PSU banks today, they have shown some kind of up move from the bottom level, so that needs to be watched out. So probably Reliance and the SBI could be the leader for next week.
Reliance SBI, look out for that one. That Yogesh believes is going to push the markets higher. Well, the week on by also saw the Nifty earnings for the second quarter finally conclude. So what's the EPS deduction like for the index? Let's take it across to Jayesh. He's been calculating that to find out more. Jayesh?
It was an inline quarter as far as the Nifty EPS is concerned, but let's have a look at how the trend has been. So you can see that the white bars are the actual EPS versus the blue bars, which give you a picture of what the analysts were expecting. Now we started off the quarter expecting higher and then underperformed that, but that's been the larger trend. If you have a look at since 2017, the white bars are smaller than the blue ones, except for Q3 and Q4 of last year, where the analyst estimates were in fact surpassed. Now if you look at the quarter-on-quarter or the year-on-year growth, quarter-on-quarter we delivered about 15% growth, and on a year-on-year basis it was flat at about 2% growth. But moving on to the scorecard that we have made at ET now, if we have a look at that, where were the estimates? So as of 1st July, the analysts were expecting about 126 odd rupees, and that itself was revised down by the time when earnings season kick started on 10th of October. So to 124.3 was what the analysts were estimating, while the current estimate, the actual number that we got was about 120 rupees. So largely in line or just slightly below on the EPS front. So we'll have to wait and watch how Q3 and Q4 turn out to be.
Okay, well, the week gone by also saw a fair amount of shake-off when it came to Yesbank. Quite a few exits, all the way with, the chairman as well, that's Ashok Chawla. Then you had OP Bhatt as well resigning, and that took a fair amount of toll on the stock as well. The stock has been significantly under pressure. It was down out of the three trading sessions out of the 5 in the week gone by, and the stock has fallen a good 17% this week. Manav, do you believe that we're going to see further a breakdown in Yesbank going forward as well, and could it retest its previous lows, that of 170, 180 thereabouts?
Seems quite likely. The important support, like you mentioned, on the weekly monthly basis would be at 165, 170 on the lower side. The short-term trend has turned weak, and after that series of sharp decline, I think the stock will look to consolidate its time. After sharp price correction, I think the next phase in Yesbank could be a time correction. So I sense only for a trading opportunity one can look to re-enter at the lower levels, which is the support of 170. As from those levels we can still anticipate another bounce back. On the upside, 198 to 200 are the strong resistance. So as long as we don't see a breakout happen above that, the Yesbank would consolidate the range of 170 on the lower side to 195 on the upside.
Okay. Well, the week gone by also saw a significant cool-off in crude, and I guess that also explains the market further. The fact that we were able to push it all the way to that 10,700 mark. Definitely there was a silver lining in crude cooling off, irrespective of the inline numbers that we've seen, or for that matter, the shaky global markets as well. And what with the cool-off coming in some of the FANG names in the week gone by. So yes, crude back to 65 levels, and that's giving a fair amount of conviction back into India equities. Yogesh, do you believe that the worst may be over for OMCs? You did see some sporadic moves come in, or for that matter in some of the aviation stocks as well. Jet I will come to in just a bit, but Indigo, SpiceJet, they were all holding up in the week gone by. Anything you think is worth a relook now that crude has cooled off that significantly?
Especially for aviation sector, it will be too difficult to say because the ad hoc cost and the expenses are very high. Apart from crude, there is a ground staff and other costs are very high. What we have seen in the second quarter, all the companies have incurred heavy losses along with the crude prices which has moved higher. Now post cooling into the crude prices, then yes, of course we can see some relief for those companies like Jetairways or the Indigo or the SpiceJet altogether. But Indigo will be the one where we can see that really they have done very well in last 8 years, and they have not incurred any loss so far. This is the first ever time they have incurred loss in the last this second quarter. So probably that there we can see that sign of relief could be there for Indigo. Jetairways, still it is going on, going through a transition mode, or maybe in the initial talks for the management changeover, or maybe any other kind of changes into the management. So that seems to be difficult right now to say, because that will play a major part for the sentiment of Jetairways in the next coming week. But as far as aviation are concerned, then Indigo would be the preferred one where we can see some better action into that company's stock price.
Well, talking about aviation, how can you not take notice and cognizance of what happened with Jetairways in the week gone by? The fact that it's written 44% 4% in the last 4 days. In fact, on Thursday alone, the stock moved up the maximum single-day gain ever since its IPO way back in early 2000s. The consensus price target is now a good 2.5% higher than the current market price on Jetairways. Let's take it across to Pranay. There is, of course, the market was rife with all sorts of chatter that perhaps it's the Tatas which are eyeing Naresh Goyal's stake in Jetairways. So let's take it across to Pranay first, find out what exactly is all this buzz about. Pranay?
Well, the stock of Jet is extending its rally for the fourth straight day this week. It's up about 30% this week, and ahead of the important Tata Sons board meet. Amongst other things about the group companies that we discussed, the entire spotlight seems to be centered about Tata Sons chief N. Chandra's pitch to the board on plans to buy Jet. There are quite a few questions which will take some answers, which will come with time, but right now the interest is that since the government also has asked the Tatas reportedly to help out over here, it seems to be the only one as a front runner amongst many other parties. Now, also there are other reports that Tatas may look to end its joint venture with Air Asia and focus on its full service carrier plans with Singapore Airlines, that is Vistara, and that will complement the business of Jet, since that is also a full service carrier holding about 18% market share. So if he manages to succeed in getting approval from the board, which of course is a process driven method and will take some time, then the two could combined have the second largest market share, which could be about 23-24%. But important questions on capital as well as combined fleet and operation network, cost rationalization, these will be some of the important things that will be discussed. The stock of Jet has been on a tearing rally and has been the best performer this week, so it also remains the top newsmaker this time.
That it sure does. Manav, what is the sense that you get? Do you think a major part of the rally is already behind us in Jet after this 44-45% odd move in the last 4 days, or do you think the stock can see the same amount of follow through in the next week too?
See, since the prices have already breached its important weekly, monthly support, monthly hurdles, and most importantly, the recent rally has accompanied by very good volumes. I think the momentum looks very strong into this. Quite likely, the prices are likely to see some sort of a rally, and this follow-on move could be extended towards the levels of 400. So I think purely on the short-term momentum play is something that one can look at. Still, the long-term charts are still looks quite dicey, but I think it's only going to be a momentum short-term play. One should keep a stop loss of 310 on the lower side, and one can look to initiate long positions.
Okay, gentlemen, stay with us. Lots more to talk about. It's been a hectic last week, but the next one as well promises to be exactly the same. We'll take a very quick break, and as we do that, let's hear out what Chris Wood from CLSA and Mahesh Nandurkar had to say on the sidelines of the India conference.
Clearly, the growth's going to slow in that area as a result of the ramifications, shockwaves from that AAA credit defaulting. That's very unfortunate because it's going to basically at least temporarily remove or destroy investors' confidence in credit ratings. So clearly there will be more of a slowdown than previously anticipated. But equally clearly, a lot of that slowdown has been probably more than discounted in the sharp sell-off. My hope is that the worst has been seen in this area. I think it's encouraging, I wouldn't put it stronger than that in October we saw some renewed inflows into the bond funds after the big stampede out of them in September. We still, in my view, on a situation where the residential property market's in an early stage of a recovery after an extended downturn.
I've been actually quite optimistic, on the housing sector for a while, but there have been sort of various external events which have kept on postponing the housing recovery. First it was the demonetization, there was the RERA implementation, GST implementation itself, and now with what's been happening with the sort of NBFC sector in terms of the liquidity issue. Our overweights are still the pharma and IT services sector. We quite like the domestic, especially the rural consumption story. So there are plays, on the rural consumption stores like the tractor manufacturers, and a few, select FMCG companies. We also like from a long-term perspective, as I said, the housing market recovery, and to that extent, the property developers will be beneficiary of that. And the property developers are also seeing the benefit of industry consolidation. So while
Back with your trades, and what a week it has been. Managed to push almost to the 10,700 mark. A significant cool-off in crude and finally got done with earnings as well. In line is how you would sum up the second quarter gone by. But let's find out what's lined up in the week ahead. First, Pranay joins in with all the events to watch, and then we'll have Ajay talk about all the stocks that the dealing rooms are keeping on their radar for next week. But Pranay, you first.
Well, starting off first with our home country, it will be the RBI government board meet that will be most important. Now, there are some important issues that will be discussed, such as the capital adequacy math that the government would try to understand in order to hope and make norms easier for PSBs. That is what they are pushing for. Also, the transfer of surplus from RBI to the government, since they will require it for the upcoming elections, and whether we are going to see signs of friction easing between the two. That will be most important to watch. Then if you look at US, the durable goods orders as well as the capital goods orders will be coming out. Now, capital goods is expected to show a mild uptick, while durable goods are expected to show a decline of about 2%. That's because October isn't a particularly strong month, but going forward, November and December are going to be stronger given the holiday and the shopping season. Then there will be the initial jobless claims for the week ended November 17. Now, last time it was 216,000. The number is expected to be similar this time. Leading index is also expected to show a 1% uptick, and existing home sales are expected to show a steady improvement of about 2.5%. Lastly, from US, you'll have the manufacturing PMI number, which is expected to show an expansion. This time, the poll from analysts is about 55.9. Last time, it was about 53.5. If you look at Eurozone, then the OECD economic forecasts are expected, and a growth of not more than 1.5% is expected for this year. Lastly, there's a European manufacturing PMI number, which is expected to be flattish for the month of November.
We saw good gains coming in on the Nifty this particular week, and traders believe that the market will trade with a positive bias in the near term. Almost 10,700 already done. The next level to watch out for as per traders is 10,756, which is also the 200-day moving average, which in all probability may be tested in the coming week, because there are buy orders which dominate the desks both on the DI and the FI side. Meanwhile, even the HNIs have started buying into the market, value buying happening. Both in corporate banks and select NBFCs have started witnessing buying, ICICI Bank, Piramal, etc. Even on the consumer side, numbers which came in very good the second quarter, stocks like Kajaria, Ceramics, etc. are witnessing very good buying, and these are stocks to watch out for. Next week, of course, there will be a couple of events to watch out for. The RBI government meet, where there is talk that reconciliation is happening and the issue is simmering down. That will aid sentiment. In fact, the big sentiment booster this week also has been rolling over of CPs by a lot of NBFCs. They have repaid and is aiding sentiment. So things from extreme negative panic-like situation have eased out. Crude prices have come down and are stabilized and not rebounding in a sharp manner. So that is something to watch out for in the coming week, which will also aid direction for the market in the medium term as per traders.
Yeah, that it sure has been acting up. Ajay, Pranay, both of you, thanks for highlighting what to look out for next week. And Yogesh, wanted your sense on how critical the RBI board meet is going to be, and what do you think is the market going to look out for from there?
As I mentioned in earlier conversation that a board meet of RBI would be a very much would be a critical role then because there needs to be watch out for what are the changes, if any, for about capital adequacy ratio to be maintained, the working capital needs to be maintained, and if there is any conflicts between, and that I think it will give a patch up kind of a situation between the government and the RBI governor, which was ongoing in the news section for last 2 weeks, and that will have some cooling effect there because that will clear the rumors air from the investors and the traders mindset that everything is fine. So that needs to be watched out, more important, and rest of the things on the upcoming RBI policy also we need to watch out for, which is there on the first week of December coming month. So that will give a clear picture about the capital adequacy ratio and the liquidity provision for at least for the liquidity for the economy to be on a better shape. So we believe that yes, in the banking analytic way, it should be a very important one without any more of deterioration and changes in unfavor for economy.
In fact, the board is meeting on Monday, that's the Reserve Bank of India board, to resolve differences over critical regulatory and policy issues and perhaps bridge the widening rift between the central bank and the government as well. Neha Bothra, my colleague, joins in with more details on what can we expect from this very important board meet.
Indeed, this is going to be a very crucial meeting where the RBI board members will look into various issues where we have noticed there's been a widening rift in terms of differences that have cropped up and how to tackle these. At the core, of course, will be how to manage the 3.67 lakh crore question. Remember, this is what really the whole matter is about. The number I just referred to is the amount that is the surplus on RBI's balance sheet, and this is what the RBI feels should be retained, but the government feels this should be transferred to its coffer. So really the entire dispute that we are seeing at this point boils down to that one number and how to tackle that, and thereby topmost priority we are given to understand in the meeting will be to frame a capital framework which will allow the government and the RBI to agree upon a percentage which will be the amount RBI will retain on its balance sheet and the excess will be transferred to the government. Now this of course is a very contentious issue and we'll see how this moves in the meeting on Monday. Other issues that will come up, of course, will be PCA norms. Remember that the government feels that this should be relaxed for the 11 public sector banks so as to free up lending and also boost lending in the economy. But the RBI feels that the need of the hour is to fix the balance sheets and to ensure that public sector banks are in good health. And thereby there's also possibility that there will be a realignment as far as capital norms are concerned with Basel III norms. These are some issues that will be taken up in the meeting.
Okay, let's also scale it down then to some technical ideas and trades one can execute for Monday morning. Manav, what is on your list?
Yes, I have 3 calls. My first buy call is on Orientbank. Most of the PSU banks have witnessed a good momentum shift, and Orientbank has also seen a good weekly breakout happen with above average volumes. The oscillators have also entered into a buy mode, and there has been a good formation which indicates that the bottom is in place. We recommend a buy into this with a stop of 89 for an upside target of 100. My second call would be a buy on Zee Entertainment. Basically, the stock has witnessed a series of decline from its recent peak and has declined by over 25% from its all-time highs on the weekly charts, with the presence of some momentum indicators indicating that the short-term bottom is in place. I sense there is a very good risk-reward ratio at the current levels, and the prices could see a good pullback rally from the current levels. It has an important support at 435 on the lower side. 432 can be the stop loss for an upside target of 480. And my last pick is on Tatapower. Basically, the stock, after a good weekly breakout, has been consolidating its gains and has been forming a series of higher tops and bottoms. The prices have also formed a very good base around the levels of 75, which also coincides with important support and long-term averages. We recommend a buy with a stop of 74 for an upside target of 85.
Okay, Manav, Yogesh, both of you, thank you so much for taking the time out and analyzing what went by in the week gone by and what lies ahead for us in trade. We'll see you with all the market action on Monday morning, but as we wind down in this edition of Your Trades, here's Atul Suri on what he makes of the charts with various segments of the market.
If I look at the Nifty, my first level that I would have looked for was 10.7. 10.7 is where we went, tested again, went back and retested 10,000. This was the first hurdle. I feel in the path to recovery, my first stop would have been 10.7. Beyond that, I would have actually thought with this kind of crude bounce and the way the NBFC crisis seems to be dissolving really, we would be much higher, more towards 11,000. Just a case in point, ICICI Bank touching a new high yesterday.